Okay. So, all right. Yesterday we have done the rental income and expenses. Those two topics were done. Now, the last topic in our study unit number 3 remaining is the loss limitations. So, to understand the loss limitation, first we will go through some examples. We'll understand the concept and then we'll move to the claim book. Okay. There is a very basic rule. Let me mention it over here. Whenever you are going to incur a loss, okay, see, rental income and expenses, if you are going to incur a loss over here, it will be there on your 1040 form. Okay, I know in your part 2 only 3 forms are there, but they have added this specific topic in the part 2, so that's why I'm explaining it. Same way for a Schedule C, a business income as a sole proprietor. Okay, as a sole proprietor, there can be a loss. Okay, same way in case of partnership firm or a S corporation, when you are going to receive the K1, there can be a loss in that company also. So, what this loss limitation is going to tell us about is how the sequence will be there to set off the loss. Which loss we should give the first preference and the remaining loss will get carried forward. Okay, this is what we are going to understand in this whole chapter. Let me take the example. See, the this I can say the sequence for settling of the losses will have 3 different sequence. First one will be your basis rule. I'll explain the wordings, don't worry. Basis rule. Second will be at risk rule. Okay. Third will be your passive activity loss limitation rule. Okay, and whatever is the remaining will be called as your excess business loss, which will be carry forward. Here we will see there is a limit. There will be a limit of like this much amount you can carry forward and this much amount you can set off. Okay, so this 4th step you need to remember if you have a loss in your business. It can be partnership firm, it can be S corp, it can be your rental losses there, or Schedule C losses there. The sequence will remain same. Okay, now let's understand one by one what is basis rule. First, understand the meaning of basis, because this word we are going to use a lot in part 2 syllabus. Okay, in partnership chapter, we'll see what is the basis of a partner, what is the basis of a partnership firm. In asset topic, we will see what is the basis of a property. In S corporation also, there will be a basis. So what actually is this basis? Whatever is your initial amount which you have invested. Okay, now let's think from all the 3 different point of view. If it's a partnership firm, what do you mean by basis? Whatever contribution you have brought into that firm will be your basis. So can I say contribution brought into the firm? But that is called as initial basis. It can happen that each year you are earning a profit, or each year you are contributing more and more amount, or let's say you have taken some distributions. So you are going to make some addition or deletion for contributions, for profits. You will add that much amount in your initial basis. And then you will reduce some losses if you are incurring or if you have withdrawn some amount. Right? It's a kind of capital account, I can say that. Let's say $100 you are contributing in the year 1 when you got admitted in the partnership firm. Each year that partnership firm is earning, let's say $10, $20, and in 3rd year you have withdrawn $50. So you'll have to straight away reduce it. So this amount of $20 remaining is your adjusted basis in your partnership firm. So what this rule says that This rule says that whatever loss you are going to have, that needs to be first settle off against your basis. Okay. Now let's say year one, year two, you earn profit, year three, you earn profit, year three, you withdrawn $50. So at the end of year three, what is your basis? It is $20. Now let's say in year four, you have incurred a loss of $50. This is a loss. So first it will get offset against your adjusted basis of $20. So this will get reduced to 0. Basis can never be negative. Remember this rule. It is helpful for every topic of your part 2. Okay, even for property, even for partnership, even for S corporation, every topic. Okay, so see, $20 will get straight away reduced from your adjusted basis. And out of this $50, can I say still $30 is remaining to settle off? So first step will be your basis rule. Now let's see the second step, like what we can utilize more from this now. At risk rule. What do you mean by at risk? First, understand that. Right now, I'm just explaining it in a very short manner, just to understand the sequence. Okay. Then we'll see this example and then we'll read the theory. Okay. See, basis rule is simple. Whatever is your actual stake in that partnership firm or actual stake in that property or actual stake in the S corporation. Right now, for the point of view of this topic, currently we are looking at the business losses. So you will check what is your investment you have bought into your Schedule C business. What was your basis in partnership? What was your basis in S corporation? Or in case of rental, right now rental we are not taking. Basis is not there in the rental business, huh, guys? In rental business, there won't be any basis. Only in case of sole proprietor, in case of partnership, case of S corporation, there can be a basis, initial basis, like this much amount you are contributing into the business. Okay. So basis rule is clear, everyone. Any doubt in that? Let me know, guys. Any doubt is there? Na? Please unmute and let me know. Today, as my laptop, I'm not using for the chat box, so that's why. Okay. All right. So at risk rule is what? Let me take one more page. At risk means what? Do you remember the topic limited partner and general partner? General partner will have unlimited liability. Yes. Any question? Girish, we are not able to hear you. See, I'll again repeat this thing. Like whenever you join this lecture, please make sure you are on mute. Whenever you have a doubt, you can just unmute and ask. Okay. See, now if this concept you remember, limited partner and general partner topic, there what was the case? General partner will have unlimited liability, means he will be personally liable also. If any borrowings are not paid, let's say a partnership firm has borrowed $10,000 and there are two partners, limited partner and general partner. So for this $10,000, this general partner will be liable. Okay, got it, guys? So he will be at risk for $10,000. Now this at risk amount will get changed. Like every year, there will be some repayments. Let's say $2,000 they have repaid. Now general partners, it at risk for how much remaining amount is outstanding amount, it will be at risk. That is 8,000. Again, next year they paid 2,000. Now he is at risk for how much? 6,000. Okay. Again, like last installment, when they came at last installment, they were not able to pay the amount of last installment of 2,000. Okay. So now this general partner will be liable for $2,000, means he's at risk for $2,000. Okay. So whatever is the loss, let's say this $30, let's take it as a 20. Okay. This $30 second will get offset against at risk of $20. Okay. Got it, guys? Now, still there is a $10 remaining, which we will check the next two steps. Got it, guys? First, let's solve the practical on these two steps. Then we'll move to the next, because this next two are totally different as compared to this two. Okay. So let's see one example from this. In 2021, there is a loss in a partnership firm for $10,000. Okay. Now, Mr. A was having a share of 50%. So can I say only 5,000 will be allocable to his capital account? He will be liable only for 5,000 loss, right? Now, how much will be allowed? Assuming his basis is $3,000, his adjusted basis is $3,000 in the partnership firm. So out of this 5,000, he will be liable only for $3,000, not more than that. Okay. So this basis will get reduced to 3,000. Means, can I say first, this $5,000 was a loss. First, it will get allocated to basis rule, that is 3,000 was his adjusted basis, minus the loss of 3,000 will be allocated over here. Okay, so $0 will be his new basis. What about the remaining 2,000? In this example, we have assumed there is no at risk for this particular partner. So this 2,000 will get carried forward. Okay. Now, next year in 2022, he has contributed 5,000 in the partnership firm. So can I say now his basis was 0, it has increased to 5,000 since he has made a new contribution. I hope this much is clear. This carried forward amount can now be reduced from the next year's basis, and the new basis will be $3,000. Okay. Clear, guys? Any question in this? This is a very simple rule, basis rule. Second rule we are going to check is at risk rule. Now let's take the same example, but in this A, now let's keep Mr. A as a general partner, and there is Mr. B who is a limited partner. They have borrowed a $10,000, right? So can I say Mr. A, being a general partner, will liable personally? Okay, but to the extent of his partnership share. Let's say his partnership share is 30% and B is having a share of 70%. So this 10,000 multiplied by his partnership share is 30%. So he is at risk for $3,000. Okay. Now taking the same example, let's say this Mr. A is having a at risk basis rule also will apply and at risk rule also will apply. So A's basis in the partnership was how much? 3,000. So we can deduct 3,000 straight away from his basis. Out of 5,000, we have allocated 3,000 over here. For next 2,000, we will check what amount he is at risk. He is at risk for $3,000, right? $3,000. Just a minute. Here they have changed the liability to 10% now. General partner 30% liable at risk to the extent of 3,000. Yeah, if we take the 3,000, the whole amount will be allowed. Let's take both examples. 30% if Mr. A is liable, the general partner is liable for 30%. And second example will take if he is liable for 10%. Okay. In first example, he is at risk for 3,000. So this whole 2,000 will be allowed as a deduction from this 3,000, and he will be still at risk for $1,000. Okay. But let's take the other example where we are having the at risk amount of only $1,000. So can I say this 2000, out of this 2000, only 1000 can be offset and remaining 1000 will get carried forward. So total allowed loss will be what? 1000 and 3000, that is $4,000, and 1000 will get carried forward. Got it, guys? This much is clear. Anyone is having any question? This specifically gives preference to partnership and S corporation. So can I say the first two will give preference to S corp loss and partnership loss? Second preference will be given to our Schedule E loss. And the last preference will be given to Schedule C loss. Got it, guys? Now
Hey, quick
this
question,
loss,
Stevie.
yes.
So is it okay to say that at-risk rule will only apply to the GPs? Would that be okay to
Yes,
say that?
yes. Because they are only at risk. Limited partners will not be at risk. At risk meaning is what? For at risk means you will be personally liable. You are at risk. The word itself says that. Okay. Also, they can use sometime word recourse and non-recourse. Okay. We'll see these two terminologies when we do the partnership topic. Right now, for understanding the concept, just remember at risk will only be the general partners. Okay. Shareholders, yeah.
So going back to the example, right? I mean, let's just say, assume that Mr. A was a limited partner and not a GP partner. So does that mean that he would only have a basic rule applied, and then it would basically anything that's disallowed would be carried forward for the next year? Because he wouldn't even have to
Yes,
go through at-risk rule, right?
correct. So that's the same example we have used. Assuming Mr. A is just having a limited liability. So this 2000, he cannot check for the at risk rule. He is not at all at a risk, right? Second example, we have considered him as a general partner and checked that how much can be allowed in case of at-risk rule. Now, sometime it will happen. See, Mr. A and Mr. B both will be 50-50% partner when it comes to sharing the profit and loss. But when it is a question of sharing the liabilities, they can change the percentage. They can have a 30%, 70%. Got it? So, any other question, guys? Okay. Actually, in your Gleam book, they just wanted to explain you the third step. But to understand the third step, first you need to go through the first and second step also. That's why these two topics are there in this study unit number 3. Actually, it will come again. We'll read it again, again in a detailed manner when we do the partnership topic and S corporation topic. In S Corp also, you will check that only basis rule will apply. Their at-risk rule will not apply. In S Corporation, you might have seen that no one is going to have unlimited liability. Unlimited liability occurs only in case of partnership firm. That too also in case of general partner. Okay, so they will apply, S Corp will apply the basis rule, and whatever is remaining will get carried forward. Now, what is actually the logic? Now you have to understand that. Uh, let's take example. Mr. X is a individual taxpayer who is filing a 1040. Now he is also a partner in X and company, partnership firm. He is also having a Schedule C business. He is also having a Schedule E rental business. Okay. So all these three are having a loss. Now on 1040 form, the losses can be set off against, if it's a ordinary income, it can be set off against ordinary ordinary losses can be set off against ordinary income. If it's a passive loss, can I say the rental will be the passive loss, can be offset against passive income only. But there is one exception. If this passive loss fulfills certain criteria, it can be offset against ordinary income. So there has to be a particular sequence, like from this ordinary income, who should be given a first preference. It is possible that your ordinary income is just $1 lakh, but you have a loss of 50,000 from your partnership firm, 80,000 from your C Corp, and 20,000 from your Schedule E. So can I say your total loss is 150? You cannot straight away reduce this 150 directly from 1 lakh and carry forward the 50,000. What can be the nature of that 50,000? To decide that, we need to keep a proper sequence to set off this 150,000 of loss. So first preference will be given to the partnership firm. This 50,000 can straight away be reduced from this 1 lakh, but there is an internal limit. Do you remember, do you understand, this 50,000 will be limited only up to Mr. X basis in the partnership. Second, at risk rule in the partnership, and remaining will not be allowed. Let's say Mr. X is having a basis of 30,000 in the partnership firm, and he is having 10,000 at risk. So whole 50,000 cannot be deducted from this 1 lakh. Only 40,000 will be allowed. Remaining 10,000 will be carried forward to next year. Got it, guys? So this, I can say, there is a two criterias you need to check. Just like in those who have done CA, like those who have given CA exams, they might be aware about 4 papers are there. For example, each paper you have to get 40 marks. So can I say when I total this 40, it comes to only 160. But overall, you need to earn a 200 marks. So internal limit is also there and overall limit is also there. Got it, guys? So same way over here, what you need to check is, first is basis rule. Basis rule, you need to check the adjusted basis. Second is at risk rule. You need to check that how much percentage of liability he is at risk. Okay. This much only will be maximum allowed to set off against ordinary income. The first will be allowed this. Okay. Once you reduce this first thing, whatever is the remaining, you will check for the second kind of loss, that do you have any rental loss? If yes, from that, is there anything which is going to be reduced from ordinary income? We'll check the criteria for that. If yes, the second priority will be given to this loss. After you reduce the rental losses, which needs to offset against ordinary, you will check the third step, that is your last step, that is your Schedule C losses. Now, Schedule C is specifically called as net operating loss. The last preference is given to Schedule C loss. It will get carried forward indefinitely. Remaining amount will get carried forward indefinitely. Whatever is your Schedule C loss, there is again one limit that only that much can be reduced and remaining will get carried forward. I hope the whole structure is clear. Now, when we do solve the example, you'll understand it properly. Okay, any question, anyone? Okay, so first one we have seen basis and at-risk group. Let's look at the next is passive activities. If you are having a rental property, so this is not applicable to partnership, S Corp and trust, because they have already given a preference in our first two steps. Partnership S Corp is not going to have any passive activity loss. Only in case of ordinary income, they will have an ordinary loss. Right? When you see the K1, when you look at the schedule K1, everyone, those who are working practically, they might have seen schedule K1, line 1. K1, line 1, do you remember? There is an ordinary income or loss. So only this line 1 will be allowed over here. Okay. So here, in case of passive activity, loss from the passive activity can be set off against only passive income. Means rental losses can be offset against your interest income, dividend income. Only that much can be offset, remaining will get carried forward. But if you fulfill these three conditions and the phase out limits, if you fulfill, then it will be allowed to offset against ordinary income. And you can fall under the second sequence. First will be basis and at risk, and second sequence will be your rental losses. Okay, I hope this much is clear. So you have to set off against ordinary income. What criteria is there? Participate materially for half of the work. Means you are actively participating in renting out your properties. You are actively looking out for tenants. You are advertising. You're incurring some expense and doing some active participation. Now, what do you mean by active participation? It will be more than 750 hours, right? Yesterday, I've mentioned that if you're working for more than 750 hours during the whole year for that particular property, then it will be called as a, it will be allowed to set off his losses against the ordinary income. Now, third condition is the loss should be up to 25,000 only. If in case it is more than 25,000, then maximum 25,000 is only the limit which you can offset in your step number 2. Means maximum 25,000 you can set off. 25 or your actual loss, whichever is lower. Okay. But this 25,000 will again get reduced if your Maggie is more than the limits. What is Maggie? Let me explain you that thing. For a 1040 filer, Maggie is the adjusted gross income plus all the tax exempt incomes. Okay, you don't have to remember this thing. For part 2 purpose, they don't have this calculation kind of thing in part 2. They'll just give it in the question, what is your modified AGI or what is your AGI, they will give you, and tax exempt interest income, tax exempt income, everything will be given. You just need to add back your tax exempt income to your AGI. Got it, guys? So this AGI, you need to check the limit. If it is up to 1 lakh, whole 25,000 will be allowed as a deduction from your ordinary income. If it is more than 1 lakh, you will have to reduce 50%. You have to phase out, okay, 50% of what amount, guys? 1 lakh 50 is the highest limit. Means you can just draw a chart like this, 1 lakh up to 50,000. So this is kind of like 25,000. You just have to reduce it by a percentage. So how much percentage you will reduce is 50% of what? 150 minus your actual Maggie. Okay, the difference between the upper limit and the Maggie. Normally in part 1 exams, part 1 papers, those who have actually done that whole part 1, you might have seen we used to take the lower limit and the actual Maggie. In this rental related limitations, we will take a phase in. There we used to take a phase out. Okay, so that was a difference between phase in, phase out. Here you need to check the actual Maggie and what is your highest limit. Upper limit is 150. Okay, take a 50% of the difference between 150 and the actual Maggie. That much will be reduced from the 25,000. Okay, and the remaining amount you can get as a deduction from your this ordinary income. Same way, if your income is more than 150,000, if your modified AGI is more than 150, then you will not allowed to offset a single dollar from your ordinary income. Even if you are working for more than 750 hours, even if your rental loss is up to 25,000, you will not be able to offset any amount based on your Maggie. Okay. Now, material participation, there has to be material participation means up to 500 hours. Also, if you're working, you will be called as actively participating. And participation substantially same as others means, let's say the business is run by the taxpayer and the spouse. So both should equally participate into the business, right? And taxpayer and spouse should at least spend 100 hours plus same as that of each other. Let's say taxpayer is spending 700 hours, but spouse is spending just 100 hours. Okay, so it will not be enough. There has to be material participation means minimum 100 is fine, plus as compared to taxpayer, she should be spending the equal hours, and summing up, it should be more than 500 plus more than 750 hours. Okay, so no need to remember each and everything, just understand the sequence which we are doing right now. You can just remember the active participation. Material participation is 500 and active participation is 750 hours. Okay, they'll have to fulfill any of this condition, then they can easily take the passive loss against the ordinary income. Okay, over here the second step is clear, everyone. So in our study unit 3, they were mainly focusing on this part, but to understand this, you should go through the 2 steps first, basis and interest rate. Okay, now let's see the excess business loss limitation. What it is saying, if you're having a loss in Schedule C businesses, you can offset it against whatever is the remaining ordinary income. Your ordinary income minus your K1 losses you have settled off minus your passive active loss you have settled off. This remaining ordinary income, if any you have, you can set off Schedule C loss. Okay, now this settle off can be done only up to a limit, that is 2,70,000 in case of a single taxpayer. In case of a MFJ, it will be 5,40,000. Okay, so let's take an example here. It is just 2 lakh ordinary income which is remaining. Okay, 2 lakh. Now you can set off, not set off 270, but let's say you have a Schedule C loss of 2,80,000. You can set off only 2 lakh over here. So can I say the remaining 80,000 will get carried forward? Now, when this is getting carried forward, now only for Schedule C, that is NOL loss, we will call it as a NOL, net operating loss. When it is getting carried forward, maximum 80% of taxable income will only be allowed to offset. Means let's take example, this is 2022 tax year. In 2023, your taxable income is $1 lakh. So I know this 80,000 is up to this limit, but you cannot offset whole $1 lakh. So whole 80,000 cannot offset. Now let's take another example because it is exactly 80,000 coming 80%. Let's take it as a $2 lakh. Okay, 90,000. Let's take it like this. Okay, so this 80,000 is within this limit, but you cannot offset the whole 80,000. What you're going to do, take 90,000 multiplied by 80%. That much will only be allowed to offset. Okay, so the whole 80,000 will not be allowed. 90,000 into 0.80, 72,000 will be only allowed. So remaining 8,000 will again now get carried forward to next year, because carry forward, they don't have any limit. But when it comes to setting of the losses, there is a limit of 80%. Got it, guys? I hope all the 4 steps are clear to offset the losses. Any question, anyone?
Yes, I have a question.
Yeah.
ये जो पैसिव इनकम है, ये आईआरएस हमें इतना मतलब ये सेट ऑफ क्यों नहीं करने दे रहा? ये जैसे आपने बताया कि
Passive,
पैसिव जो भी लॉस हो वो सेट ऑफ नहीं, पैसिव
Passive
जो लॉस
income,
इन जो
yes.
भी लॉस है
See, I'll
वो हम
explain
अपनी
it.
ऑर्डिनरी इनकम से सेट ऑफ नहीं कर सकते तो हम्म
Hmm.
तो
I'll
ऐसा
explain
क्यों
it.
है
Wait.
क्यों ऐसा कोई स्पेशल इनकम
It is the rule only. See, in India also, if you have a capital loss, you can set off against capital gain only. Same way, they have a rule that if you're not actively participating, right, then you will not be able to set off against ordinary income. See, varna to sab everyone what they will do, they'll just invest a lot of money into the stock market and they will have a loss. Okay, in that loss it is a passive loss, and that loss they will offset against the wage income to reduce their income, to reduce their ordinary income. So that is not allowed. IRS is just saving, reducing the tax strategies like this. If you're earning through your active participation, that income will be kept as a separate. If you are not earning through active participation, you are just earning a interest income, dividend income, any investment income, that is your passive income. You cannot mix your passive and active business together. Okay. Same rule is there in India also. Capital gains and losses can offset against each other, but capital loss cannot be offset against your ordinary income. You cannot set off your business loss against your salary income. Let's say I am earning salary also, I'm doing job also, I'm also having my own business. So if there is a loss in my business
Yes,
in
yes,
India,
yes.
this is the rule,
Yeah,
right?
sorry. Yeah, sorry to interrupt you, but I know that. So that's why I'm asking. जैसे इंडिया में कि
Hmm.
कैपिटल गेन पे फ्लैट रेट लगता है इस वजह से वो सेट ऑफ नहीं करने देता
Hmm.
ऐसे
Hmm.
ही क्या है पैसिव इनकम स्लैब रेट पे टैक्सेबल होता है या फ्लैट रेट लगता है
Slab rate only. There is no flat rate in passive income.
तो
But still,
ऑफ क्यों नहीं
th-
करने दे रहा क्योंकि इंडिया में तो रीजन है हमारे पास क्योंकि फ्लैट रेट लगता है इस वजह से वो सेट स्लैब रेट में नहीं आएगा उसको डिडक्शन मिल जाएगी 2.5 लाख की इस वजह से लेकिन यहाँ आप जब पैसिव इनकम में भी स्लैब रेट लग रहा है और तब भी वो सेट ऑफ नहीं करने दे रहा
carry forward rule is there. See, in case of net operating loss, it can get carried forward to unlimited number of years. But if it's a capital loss, there is a carry back rule of 3 years. Sorry, 3 years and carry forward of 5 years. Okay, so this we will see again when we do the property topic, property chapter. There is a carry back, carry forward rule in capital losses. Okay, so here, see, straight away they are not, see, IRS is not worried about the tax rates, that they will pay less tax or higher tax. They just want to keep these two things separate. Passive income concept is a totally separate in US taxation. Don't think in that manner that like client is going to pay a same amount of tax, and why he need to segregate the passive and active. There the IRS is having the rule, passive incomes, passive loss will have a separate bifurcation as compared to the ordinary income. Okay, so percentage are same, slab rates are going to apply. On day one, we have just seen the basic exemption limits, right? That 12,500, 25,900, 19,400. Those, sorry, that was for part one. Sorry, guys. So that is this actual slab rate which will be applicable to your AGI. Okay, AGI minus standard deductions, then you are going to receive a taxable income. This AGI will include your Schedule C, this will include your wages income, this will include your Schedule E, everything it will include. On this taxable income, a flat, this slab rates will apply. Okay, there is no differentiation in percentage, and it is a rule by IRS. There is no explanation in this concept that why they are segregating these two things. Okay, for exam purpose, you can just remember the sequence like this. They'll give the first preference to Schedule K1 items. Okay, Schedule K1 losses. Then they'll give the second preference to the passive activity losses. Okay, got it? Any question, Shivam?
no got it
Okay. So for US taxation, make sure to keep it separate only, ordinary and passive. Next, last one was our excess business loss. They'll allow you only 270 and 540 to offset, and remaining will get carried forward. Next year also, it will be allowed only up to 80% from your taxable income. Okay, that is a rule to save the people. Like, they can do a lot of tax planning and strategies if they don't apply the limits over here. If they don't apply the limits over here, the reason is, I'll tell you one thing. See, Shivam, you will be able to understand now. I have a wage income of 20 lakh dollars. Okay, I have a good amount of income. Now what I'm doing, I'm using my whole wage income and buying new properties, and I'm renting it out at a very lower rate. Let's say I have bought a whole stores, let's say 5 showrooms I have bought, and I've rented it out to the big brands to place their showrooms over there. What I will do, I will take a rent which will be very lower as compared to the market rate, right? But the maintenance cost which I'm incurring in this 5 showroom is at a very higher side. So can I say there will be a huge losses? So will I be allowed to offset these huge losses against my wage income? This is a planning which people used to do earlier. That is why they have came up with the limitation, loss limitation. You cannot merge your passive with your active losses, active income. Got it? There is no tax rate differentiation, but people were doing this strategy. That is why they have to come up with a limitation. You can just offset only 25,000 loss. You cannot offset any other losses from this wage income. Okay. So that was a good question actually, and you can just understand this concept like this. Like, if think as if you are a taxpayer and you want to save money, what you will do in India? Can the business loss be offset against wage income? Why they have came up that rule? The reason is this only. In books, you can show as much as loss you can, right? Or you can by default do some tax plannings for saving the loss. So saving your taxes. That is why they came up with this. Okay. So next one is, let's read it from the book. The 4 steps are clear for everyone. Let's see. Yeah. Loss limitation. First one is taxpayer basis in the activity. Second one is at-risk rule. And third one is passive activity rule. So first of all, they've explained us about the at-risk rule. At-risk means what? Any loss which will be attributable to the amount for which that partner or a shareholder is liable personally. So see, this rule will apply to individual, partner in a partnership firm, member in a LLC, okay, shareholder of a S corp, trust, estate, or a closely held corporation. PSC, whatever is the personal holding company. What was the personal holding company? 5 or fewer members holding more than 80%, more than 50%, and 50% was there or 80% was there, guys? Can you even tell me?
50.
80, right? And 5 and fewer members are holding 80%. That will be called as personal holding company. Plus, they are not into the business of personal provision of the services where they are personally involved. That was one exception. Okay. Foreign personal holding company and personal service corporation are not subject to at-risk rule. They cannot use at-risk rule. Okay. Anyways, they are wholly going to be responsible for their whole business. 80% are held by this 5 members. Okay. So they are not going to apply the at-risk rule. There can be one MCQ. At-risk rule will not be applicable on personal holding company or a foreign personal holding or a personal service corporation. Okay, this 3 you can just remember. Now this will be applicable separately on each activity. Let's say I have 3 Schedule C businesses. Schedule C, Schedule C, Schedule C. Okay, all the 3 are running as a loss business. So all three activity, I will separately calculate how much I can offset against my ordinary income, against my wage income. Or let's say I have a two separate schedule E, I'll separately calculate the limit for both of them. Means if I have two units, two properties, for both the two properties, I have to spend 750 hours, 750 hours. Okay. There is one thing which IRSS came up in the previous year only, that you can merge these two property and consider it as one unit, where you will be calling yourself as a real estate professional, REP. Okay, you don't have to spend 750 separately. You can consider this two property as a single unit by calling yourself as a real estate professional, and only one 750 hours will be considered. Okay, so this is what you can just remember. At-risk rule will be applicable separately for each activity. A person's amount at risk in an activity is determined at the close of the tax year. At the end of the tax year, you will determine how much amount he is at risk. Let's say in year 2022, they have a outstanding loan amount of 10,000. Now in year 2023, they have repaid 2,000. So can I say at the end of the year, you are at risk for 8,000. You will not take the whole 10,000. Okay. A person's initial at-risk amount includes money contributed, adjusted basis of property contributed, and borrowed amount. So they are specifically here, they are explaining us about the all three things. Means let's say I have contributed a property, I have contributed cash, and also the partnership firm has borrowed a money of 10,000 from outside, from third party, for which I am liable for 30%. So all these three things will be called as my adjusted basis. So this much amount I can settle off from my losses. I can use the losses against this adjusted basis. Okay. Now they have explained us about the recourse debt and non-recourse. Okay, let's read it just a minute. Recourse debt requirement includes the following. What it includes is a person's at-risk amount includes amount borrowed only to the extent that for debt, the person has either personal liability or property pledged as a security. In recourse liability, I can call it as a limited liability. So let's say A, B, and C, three partners are there in ABC and partnership. Okay. They have borrowed a money of $10,000. Now, this bank has not given this 10,000 just like that. Mr. C was having his property. He pledged his own property. He pledged his own property for this loan. Now, this property was of $5,000 only. So can I say Mr. C will be having a recourse liability of 5,000? He is having unlimited liability, but only up to the amount that he has given as a pledge amount or has pre-decided the percentage. Let's say out of this 10,000, he will be liable for only 50%. And 50% will be the liability of Mr. A. So for both of them, this is a recourse liability. Got it, guys? Recourse, non-recourse, we will again see it in very detail in the partnership chapter. But right now, just understand the concept that let's say this A is a limited partner, B is a limited, but C is a general partner. Now, A is a limited partner. He will be liable for $5,000, but this will be limited for up to his contribution amount. Let's say he has contributed $8,000. He's having a basis of 8,000 in the partnership firm. So yes, this 5,000 he will be fully liable. But let's say he's just having a basis of 4,000. So out of this 5,000, he will be liable only for 4,000, not the whole 5,000. Got it, guys? I hope you understand the difference between recourse and non-recourse. Many people still get confused in this topic. Please understand it carefully. Whatever amount you are bringing into the business, that is your actual contribution amount. If you are limited to that, okay, but you have one more recourse liability, okay, so it will again be limited to your actual contribution amount. If it's a general partner, let's say general partner is there, he has contributed 4,000, but his recourse liability is $5,000. So he will be liable for whole 5,000 since he's a general partner. Got it, guys? I hope this much is clear. So it is just telling us about the recourse debt, because at risk rule is all about your debt for which you are liable. Okay. Now, at risk rule does not include debt if one of the following applies. If property pledged as a security is used in an activity, we'll take same example. C's property is pledged, okay, which is having a value of 5,000. Same property is used in the business. So C cannot consider this 5,000 as a at-risk amount. He cannot take a deduction for this 5,000. Got it, guys? I hope this much is clear. Same way, if it's an insurance guarantee or a stop loss agreement is made, or similar arrangement provides the protection for personal liability. So on this 5,000, if they have taken a insurance, okay, or if there is a stop loss agreement or any guarantee is given, then at risk rule will not consider this 5,000. Clear, guys? Are you getting this point? We have already done the steps. Just we need to understand what are the criteria. The book, in this book, you just need to remember the criteria which are given. Concept, anyways, I will clear it before jumping to the theory. Okay, so we know the steps and everything. Now you know, you'll have to understand what are the exceptions, what are the inclusions, what are the extra things we need to keep in mind before applying that exceptions. These three things will not be applicable for at-risk rule. Okay. Third one is a person with an interest in activity or one related to him or her extended the credit. A person with an interest in activity, let's say this person, this bank is having a day-to-day business with this partnership firm. Okay, this person is with an interest in activity, or this person is related to any one of this who has extended the credit. See, they can do a tax planning in this. A, B, and C are there. They have taken a amount. They have taken a loan from Mr. D. Now, Mr. Mr. B is relative. Okay, it should not be any relative, and they are going to be at risk for 5,000. They have pledged their property to Mr. D. So that is not possible. That person should not be a relative, and that person should not be involved in the business. Means, let's say Mr. B is lending a credit to A and C to run a partnership firm in which he himself is a partner. So he will not be called as a at risk. At risk means what? Any third party can come and recover the money from you if you have given a recourse or a non-recourse debt, being a general partner or a limited partner. Okay, so this three will not be allowed as a deduction in case of a this at risk rule. I hope this much is clear. Now they have explained the meaning of non-recourse liability. Non-recourse will be excluded from the amount of risk. Here, recourse liability will be included. Recourse means everyone understood now. The two partners are sharing the outstanding amount. In non-recourse means a person who is at risk. Let's say this C, Mr. C has pledged his own property. So he is at risk for the whole property amount. They have taken a loan of 10,000, property is also of 10,000. So whole loan amount, he is liable. So he is having, and also he's a general partner. So this whole 10,000 for this amount, he is liable. So this is a non-recourse. But if two people are going to share this risk equally or in any other percentage, that is known as recourse debt. Okay, it will be limited to a certain percentage, that is recourse. Non-recourse means whole amount will be bear by a single person. That single person is having a non-recourse liability, non-recourse debt. Okay, got it, guys? Now, this thing will again take it tomorrow. See, I'll link this topic. Study unit 3 is passive activity loss. This all we have actually done. You can just read the theory. See, 100 hours, 500, 750 hours, everything is given in the theory. You can just once read it. We'll do it again tomorrow, no worries. But before that, I need to explain you guys the recourse and non-recourse thing. So along with this, tomorrow I'll take a small topic from partnership chapter just for understanding of recourse and non-recourse liability with examples. Okay. Once we understand that, we'll read this theory in a very short manner. But before we read it in the class, I want you guys to go through this theory by yourself. We have done it today from the summary notes. Okay. Do solve this example. It is very easy. That 25,000, you just need to apply the 50% on the modified AGI minus 150 and reduce that much from your passive loss. Okay, so passive loss, I'm giving you as a homework to read it. And then excess business loss, as I said, 270 will only be allowed and the remaining will get carried forward. When it is carried forward, only 80% will be deducted in the next year. Okay, so our study unit 3 is actually completed. It's your duty to just go through the theory part, this all. Okay, and tomorrow I'll just take a small topic on recourse and non-recourse. So that these two lines are actually clear, because this two terminology is new for you guys. Okay, so any question, guys, in this topic, in this whole chapter? Okay. So on Sunday, I'll just announce the timing. On Sunday, we will have a doubt solving session. So make sure you are solving. On Saturday, please solve all the MCQs which I have uploaded. Revise all the topic and let me know if you have any doubt in any topic in our live doubt solving session. Okay. So that's it for the day, guys. We'll meet tomorrow again at same time, 8:30 a.m. Thank you. Have a good day.